What is up, guys? Back with another video. I'm in the 911, back on the streets. Guys, back at the house. What's up, guys? Brand new day. Brand new day, getting back on the streets. Not taking the 911 today, taking big diesel. Oh, it's been a while since I started this beast. Forget how to start. It's so damn dark in here. There we go. Brand new day. 7 a.m. 76 degrees outside. What's up, guys? Back in the truck, cruising. So, the more and more I've gone down the rabbit hole with Bitcoin, cryptocurrency, dividends, I decided to keep things super simple. So my account, I've gotten rid of all speculation. Everything. I'm not even going to hold altcoins. It's just SCHD, VIG to spread out my dividend growers a little bit to some newcomers. A little bit lower yields, better companies. And Bitcoin. And that's all I'm doing. Bitcoin as my savings tool. I'm just using it as a savings tool, long-term savings tool. I'm not saying that it's going to go to $1 million. I believe it's going to be able to keep my purchasing power over time, beat the rate of inflation. And then I'm using dividend growers that provide income but also grow more than the rate of inflation every year, the income itself. So I'm trying to remove all speculation, even though I'm still speculating on Bitcoin and stuff, but you get what I'm saying. So I just wanted to let you guys know what I'm up to. I'm trying to add Bitcoin to our business balance sheet. I applied today for a Coinbase business account, just a tiny portion, like the long-term savings I have in the business account, the money I'm not reoccurring cash flow that I use within the business. What cryptocurrencies do you guys like? Leave some comments. Are you guys altcoin fans or Bitcoin maxis? I'm starting to become more and more just a pure Bitcoin advocate, to be dead honest. I believe and understand all the narratives around all the altcoins and like Ethereum, Solana, XRP, and all that stuff, but just as a store of value, like, you know, like people talk about now the debasement trade, just like the devaluing of our currency, Bitcoin could be a place to go to store your energy throughout time without it eroding. Alright, guys, I'm back on the streets. I'm on the golf cart. So I know we got a lot of people that follow the channel that are actually hardcore into Bitcoin. And I know a lot of people are into crypto in general, like XRP, and shout out to the Running Mans. I know XRP is his coin. But I want anybody that's on here that's watching, that's like a hardcore Bitcoin advocate, write in the description the reasons why you're bullish on Bitcoin. I see Bitcoin as like a store of value, but the reason I see it so valuable is it's fixed supply. It's a commodity, so supply and demand. But I think it's going to be forced demand. I think it's going to get to a point in time where there's forced demand because our government can't not print money, just like all the other governments around the world. Most reserve currencies, they don't last more than 150 years. And at the same time, wealthy people are always trying to find a place to park their money. There's only so many shares of Nvidia before it's way overvalued. But like Warren Buffett said, those businesses are productive assets. So someone could look at Bitcoin and say it's not a productive asset. But if you do it as the debasement trade, like our fiat currency is dropping in value every single day because they're printing more of it, and Bitcoin has a fixed supply. Plus, the other thing is that it's a protocol. It's a new protocol. It's open. It's decentralized. So one centralized entity can't control it. You know, it's funny. The people that have tried to control Bitcoin or the value of Bitcoin would have actually done better just buying Bitcoin over the long term. But write in the description why you're so bullish on Bitcoin. I like to question everything. Like, you know, I'm investing in SCHD. Let's say I get a 4% yield. Well, let's say inflation is 3%. So the real yield is 1. So I'm getting 1%. Do you get what I'm saying? Just based on the dividend, not the appreciation of the shares. All right, guys, I'm gonna go walk with the baby a little bit. I have to throw my shoes out here. Then I have to try to get her in a stroller and make sure the fan's charged because it's so hot out here that if there's no fan, dude, she'll overheat. It gets too hot for her. Then we gotta get on the streets before she starts crying. Shout out to all the dads out there. You guys know the grind. And the moms. Shout out to the moms. They're grinding harder a lot of times than the dads. You guys want to know the sleeper push? My wife showed it to me. It does work. When she's going to start crying, a little forward like that. Nice little rhythm. Gets them to go right to sleep. So I'm trying to do 10,000 steps a day. If you guys are new to the channel, I go to the gym too. But I've always lifted weights, but I've never really lost any weight, to be honest. So I was 230 pounds not that long ago. This morning I was 219. I was 218 the other day. But I don't know, I guess I weigh myself in the morning fasted, but you know, sometimes it can change, like the amount of water you drink at night or something. There's a snake. See it? Right there? He just went into the bushes. What's that mean, seeing a snake? Is that a good sign or a bad sign? I've been thinking about Bitcoin this morning. I don't know if it's a good sign or a bad sign. So back to the topic of Bitcoin. Let me ask you a question. If you had to use one vehicle as a savings tool, what do you think would be better? Just be honest with yourself, whether you hate Bitcoin or not, or you're skeptical or you don't understand it. Just the fact that it has a fixed supply, okay? Let's not even say it has mass adoption. It just has a fixed supply. What would be a better, plus that we have the halvings. So the amount of Bitcoin that's created every 4 years decreases. Now, what would be a better savings vehicle? Fiat US dollars or Bitcoin? Leave your comments. What do you guys think? If you were to try to take your energy, convert it into dollars, and then you wanted to figure out a way to store your energy throughout time without it eroding, what would be the better option? Separate from investing, separate from is it a productive asset, separate from all that. Just as a savings tool, what do you think would be better? I'm not saying Bitcoin's a better option, because you know you save $10,000 today, you know in 1 month you're going to have $10,000 in your bank account. Well, to you, you have $10,000. To us, we have $10,000 when we look at the dollar amount. But what do we really have? What do we really have? So it's stable, you know. We feel safe in the US dollar. It's accepted everywhere. It's insured up to $250,000 from the FDIC. It may not fluctuate much day to day, but if you think about it, it's lost 85% of its purchasing power since the 1970s. We have high yield savings accounts that give us a sense of security, but if you look at the real yield, like if we're in a 4% inflation environment and we're getting 5 in the high yield savings account, we're getting a 1% real yield. It's been proven that our government loves to print money, and that devalues the currency every single day. Like I said, we're not going to see it on a daily basis or a monthly basis, but over time, it's like a melting ice cube. And when you have no control over it, you can't put the water back on the ice cube. But I think if I was to tell my kids, I think fiat is a good savings tool. It's good for emergency funds. It's good for 1 to 3 years of savings. It's good to have real currency, I mean your country's currency that you can access for an emergency. Because you're not going to access your Bitcoin and go get yourself a new tire, at least not right now. I mean, you could, I guess, if you had a Coinbase card. Or if you had major near-term goals, like you're saving for a house and you want to put a down payment on a house. I think it's smart to save in regular US dollars just to be safe. But long term, what are the pros of Bitcoin? It's scarce. There's 21 million, there'll never be more. It's adopted. People trust it. Larry Fink was just on TV saying he was just talking to a sovereign wealth fund, and they were asking how much they should allocate to it, 5%, 2%. Sovereign wealth funds could have trillions of dollars. You wouldn't want to save in it for short-term, near-term goals, but that's because it's so volatile. But the volatility is a benefit. The volatility is actually an asset. You're seeing that because it's the creation of a new asset class. Once the volatility's gone, the opportunity's gone. When you see an asset class form like that, you see massive returns. Like since 2009, its average annualized returns 100%. It's beat every single asset class. But that's not going to remain that way. It's that way because we're watching all the money come into a new asset class. Like when the gold ETFs were created. Go back and look at the chart of the gold ETFs. So if I wanted a savings vehicle for 1 year, it'd be fiat. I think if I wanted a savings vehicle for 10 years, it'd be Bitcoin. If you really think about what you're worried about, the long-term risks, fiat, inflation erosion, long-term risks with Bitcoin, volatility. But Bitcoin has risks. Like we don't have super clear regulation. We're about to, possibly. So I made this chart I'm going to throw up on the screen. Basically what it is, it's $100,000 today invested in or saved in US dollars versus Bitcoin. The US dollars are being measured by its inflation rate. So the purchasing power decreasing over time using an inflation rate of 2.9%, around a historical average. And the Bitcoin is going up by the current adoption rate, but there's a few different options. If you want to be more conservative or more bullish on Bitcoin, and how much money you would have in Bitcoin based on the fixed supply and the adoption rate versus the devaluing of the currency and you holding US dollars over 10 years. So you can see in nominal terms, your real purchasing power would be $78,000 if you still had your $100,000 in your bank account. It's an invisible tax, inflation. You would look in your bank account and say, I still have my $100,000. Or I guess if you were in a high yield savings, maybe it would only be eroding by 1.9% a year because your real yield would be 1%. I'm just asking questions for fun because I think to myself, like, man, should I be using Bitcoin as a savings tool, even for our business? The only issue is that, like we were talking about short-term volatility, you know, regular US dollars is stable in the short term. Because a real free market should be deflationary. So we're in a centralized system where everything is bringing the money back to the central head. And they're incentivized to devalue the currency. So ultimately, the wealth goes back to the centralized head, whether it's through holding gold or whatever asset it is. It's not like they're doing it specifically to make money from gold, but the Federal Reserve prints money. They don't actually print money. We say they print money, but really what they do is they create bank reserves. And the money enters through the banking system or the bond market. They do it electronically. It's not like they're actually printing dollars and going out and putting them into bank accounts. So the people closest to the money have access to the money first. If you think about it that way, the money goes into real estate, stocks, commodities, and by the time, it's like the broad and the base economy, by the time the money trickles down to the people, the prices have already increased. The money's already in the system. The M2 money supply is already increased. The prices have already gone up. That's why people like us that were talking about saving money in fiat current US dollars, they become losers because the money goes down in value. I'm not saying in the short term, like we talked about, it's good to have money in an emergency fund, US dollars. It's just you're trying to think of a way to store your energy and save your energy over time without it eroding and being devalued by the centralized system. So people saving, they become the losers, and the people with assets become the winners. Because the assets really didn't go up in value. It's that the dollar's worth less, so it takes more of them to buy the same asset. And the people with debt benefit because now they're paying back their debt with cheaper dollars. And that's called inflationary or inflation-induced debt destruction. So basically, making the dollar worth less and fixed rate debt becomes cheaper to pay back because the dollar is less valuable. It'd be like if you went and bought a cup of coffee for $1 today and you didn't pay the guy. And the guy's like, I'll give it to you, you owe me $1. And then he's like, pay me next year. Next year you go back and the cup of coffee's $2. And you still only owe the guy $1. It's easier to pay the debt back because, well, hopefully, because your money also went up, like your paycheck, through inflation. All the prices went up, your income should have gone up, assets went up. So that $1 doesn't seem as much as it did before. That's kind of in theory. But the centralized system, they benefit from this structure. So eventually what happens is it's like a upward wealth drain. Everything goes back to the top again. Stocks, commodities, real estate, hedge funds, all the wealth goes back to the top again. It's concentrated at the top. And we're down at the bottom trying to figure out how to save in a currency that's losing its value. They're printing $465 million a day. This is why every single year it seems like it's getting harder and harder. It's why in 2004, I could be a mechanic and buy a townhouse, have a child, my wife not work, and be somewhat okay. And 4 years later, I'm overdrafting my bank account in the exact same scenario, and she needs to get a second job. And it's not a conspiracy. This is how the system works. They print money, inflation keeps debt manageable, keeps the GDP growing, and it keeps money flowing back to the banks, corporations, and the government. It keeps the whole system running. But the one thing that everybody turns a blind eye to is that we have $37 trillion in debt. Go to the debt clock, just Google debt clock, and that just keeps increasing and keeps increasing. You can't run a household that way, you can't run a business that way. The only reason we can run it that way is because we have the money printer. And now the government's getting slick. What they're about to do is they're about to go on chain. They're about to have tons of different entities create stable coins, take our debt, spread it across the globe, and then require the entities to purchase US treasuries to back every stable coin they issue. So what it's doing is it's allowing us to continue to print money, and it's allowing the dollar to be sustainable, and it's taking our debt and monetary policies and spreading it across the globe. So what that's going to do is, I mean, I don't really know what it's going to do, but it's pretty wild. Times are changing. But let's just say you were like, let's just opt out of this inflationary system and get into a deflationary one. Let's just opt out. Not in the short term. You need your short-term emergency fund, your savings account, your tire money, your college fund. You need your down payment on your house. You got to be smart. You don't want to put everything into a new asset class, volatile asset with low rate, with not a lot of regulation. But if you were saying my long-term savings, how can I build wealth and store my energy through time without it eroding? Now you might say, you know what? I'm going to opt out. I'm going to take my long-term money and I'm going to try this out. Keep in mind, it's not really a productive asset. It's not a business that expands over time and produces something, goods or services. It's a commodity. It's supply and demand, but it has a fixed supply. It's the only commodity in the world you can't make more of. If the housing supply is short and we don't have enough homes, we go build more homes. If gold price is going up right now, look at all the mines. They're all super active, mining more gold. Or maybe they land on a meteorite and rain gold down on the United States. I'm just saying, you can't go create more. I know people will argue like, oh, well, what value does it have? It really has the value that we give it, just like the US dollar. Trust, scarcity, cryptography. It's digital energy. Can be transferred instantly. I could grab a book bag with a laptop, hop on an airplane on an Emirates, drive to Miami, hop on an Emirates airline, go to Dubai, take a seed phrase, go buy a nano ledger, take a seed phrase, put the seed phrase in, Bitcoin's right there on the ledger, withdraw it, sell it on an exchange. I'm up and running in an entirely new country. I'm just saying, hypothetically, you couldn't take that amount in gold. Gold's heavy. It's hard to store. That's why people have their gold in like vaults in Switzerland and stuff. They can't custody it. So what Bitcoin does is it flips it. It flips the flow. The flow no longer goes to a centralized entity. The flow now is decentralized. With decentralized issuance, no one benefits from money printing. There is no one central hub that benefits from printing, which you can't print. There's a fixed supply, 21 million. I've been to Dubai a couple times and I started to really like it when I was there. And there's an area there called Dubai Creek Harbor, and they were working on the new tower called Dubai Creek Tower, I think it was called. It's white. It's really cool looking. It goes like straight up, and it has these like tent-like legs that come down, and below it was going to be a mall. They stopped the construction on it. They dug out the area and everything, but they stopped for a little while. I don't know if they started it again, but I was just thinking like it's a good analogy. So that tower had like, I don't know how many bottom pieces that came down like a tent, like a teepee, like legs, like edges that went down to the ground. And then you had this one point at the top of the tower. Well, think of the old system as everybody that's down there on the ground at each one of those points. Let's just say there's, I don't know, 100 of them. There's not that many. Maybe there's like 6, but imagine everyone's down in the edges working hard, and all the wealth continues to go all the way up to the top of that tower. And that's the flow. Well, Bitcoin reverses it. It's decentralized. Now all the wealth goes to the edges. The people that are decentralized on every single edge spread evenly across the entire base of the tower, if that makes sense. Bitcoin has no single entity. There is no controlled single head. No one can change the issuance schedule. So what you buy today can't be deflated away. Unless everybody decides Bitcoin's worthless or quantum disrupts the entire network. Maybe not the value of it in US dollars in the short term like we talked about, but maybe you don't even some true Bitcoiners, they don't even measure their Bitcoin against US dollars. They just look at the total amount of Bitcoin they're accumulating, because they believe that all fiat currencies will collapse into Bitcoin eventually. I know this sounds extreme, or it can sound like a little fringe, but I'm just telling you, have an open mind, think about it. Because we've been trained to believe that the US dollar is so secure and that our savings will keep its purchasing power over time. And if you can get a yield slightly higher than the rate of inflation, you're not losing anything. But it's like we're trying to walk up an escalator going the opposite way. With Bitcoin, everybody's interacting with the same monetary base with the exact same equal terms. There is no one person that has better terms than you. In a centralized system, all the value is stored with a middleman at a bank. With Bitcoin, it's stored on the network, mathematically verified on the protocol. If you buy it directly and you're not buying an ETF or something, then you have private keys and you have custody of your own coins. It's borderless, permissionless. I guess an easy way to sum it up would be that they're printing and we're chasing, trying to keep up with it before the money erodes in value. And with Bitcoin, you own it, you keep it. You're not chasing anything. You're literally just transferring something that is losing value over time for something that is deflationary and should increase in value over time. As more and more people come to this realization, or something happens in the world with like a debt crisis or something, geopolitical risk, or excessive money printing due to job loss and no new job creation because of AI. That could be a catalyst people don't talk about. But I know I sound a little wacky, but just throwing it out there might be the answer for long-term savings as a savings tool. I know we would talk about it as an investment, but I'm just talking about it as a savings tool. But I appreciate you guys. Subscribe to the channel. I'll see you guys in the next video.
Ooh. All right. Woo. This is light work. Come on, spill the tea. Yeah. Ooh. All right. Woo. This is light work.